Hello, everybody. This is Mickey Mao with Cartoon Money Printers .com. um, Today we are going to go. Today is February 7th, 2025. We're going to go over some weekly TA. We're going to look at a few coins. I'm going to try to get Astronaut Toad to move fairly quickly. He's pretty set up, pretty good. Um, but yeah, without further ado, why don't you go ahead and take it away there, Astronaut Toad?
Evening, everybody. It is Friday night, and we have had a absolutely bonkers week so far. And the month of February is off to a rocky start. As I forecasted last Friday, when it was February 1st, I called this a retrace right here. As you can see, this is from 2-1. And we are following that so far. So what I'm assuming we might get is, choppiness around here on the monthly chart, and then maybe a terrifying dip down to one of these lower levels. We've got some levels here for you to watch. Oh, I didn't mark this one. Let's see. This price note. So here is the low. 89028, $89,000, $28. That's the first level to watch. And I know it's scary to think we could dip that low. And as usual, with the global economic and political situation being as crazy as it is right now, we could shoot straight to the moon right now, or we could shoot straight through the floor. Based on looking at this monthly chart, it's kind of a coin toss, except if you'll remember from last week, I had said we've got a red dot here, and if this plays out, it is, if I'm not mistaken, a bearish divergence. Yep, there it is, still a bearish divergence. See how that line is just barely below? No pun intended. Barely below. So this cross, we have a dot here, okay? And I'll draw, there's a vertical line there. And then we've got this dot here. So these two verticals, that's a bearish divergence because this high is way higher than the other. So that's why I'm forecasting this pullback, despite some people being very bullish on the overall global economy. So that's the monthly update. Let's look at the weekly chart. And let me hide that folder and pull up the weekly folder. On the weekly chart, we are in nasty chop zone because let me pull this zoom in here. We are in nasty weekly chop zone because this has SFP'd the high. So there's a new all-time high in BTC at 109,358. But then the following week crashed pretty hard. And then this week that is almost over has given us a rather nasty but neutral doji. This is not a shooting star or a hammer doji. It's just a very spinning top, or it's a doji that is very neutral. So again, on the weekly chart, very neutral. We're in the middle of this internal range, so it could go flying up, it could go flying down. The only thing really to do looking at this chart is to just wait for price to get down here to this low, which I already called out, 89 something something, or the all-time, back to the all-time high. As far as the weekly chart is concerned, there's nothing to do until you get to one of these levels. Although I will say, in terms of spot bags or stink bids, it's a great zone to start DCA buying. We were talking about this earlier in the private Discord, but anytime you see a weak close like this, and everybody is very bullish, but you get a scary red week like this, this is all time to add a little bit to your spot bag. So especially as this past week ripped to the downside, I hope everybody, you know, threw just a few bucks that's on spot. Like I say, this is whenever I say stink bid or knife catching, that's not financial advice. Obviously, you're gambling, but it's a long-term gamble that you know, stacks the odds of gambling strongly in your favor. So, spot bags, bottle. Let's go to the daily chart and hide that weekly folder and bring up the daily folder. More on the daily chart, it is even more crazy. Look at these 3 wild dojis in a row. These are bearish. These are shooting star dojis. Bearish, and then now this 1-day candle still has most of the candle left to go, about 22 hours left in this candle, but that is really bearish. So for that reason, I am expecting this low to get visited. As scary as that might sound, 91, and then all the way back down to the other low, 89, oh something. That's why I'm expecting that, because this did break bearish. We had this market structure. Let me hide this. But this was all, let's see. This was all internal market structure. Actually, let me just draw here. That's on the monthly chart. Yeah. When you look at market structure here, you have to look at the, let's see, what color is daily? It's purple for me. You've got this level here. This is your high. And so that means that all of this is internal market structure. Then the high gets broken, and then this is your new high, which means that all of this is now internal market structure as well. Then the high gets visited once again. And so this, because this is a straight shot from here to here, hide that. This is all a straight move up, and there isn't really market structure. So this whole range is internal, this whole thing. That's all internal market structure. And because it wicked the previous all-time high, you should expect, and this is an internal market structure shift. Basically what I'm saying is expect this low to get revisited. It could shoot up from here because technically this was a visit of discount. We could delete all these. We could draw a special fib from here to here. And again, I've got my fib tools in the private Discord. If you want to see all these settings that I use, you've got the very powerful fib 618 level here. Look at how these dojis are right in between. That is some strong golden pocket support, okay? And also you can see, just look back through the course of this whole level. You can see how price has respected this level from above and below. If I should draw this as a liquidity zone and then extend it out.
I wonder
See how that is getting respected from both levels?
Yeah, I wonder if there's some sort of meme where it's the inverse of 69, 96. And so, like, the psychology might be an aspect here. I don't know. I'm just speculating.
I don't know what you mean.
Well, 69K was the psychological level for the meme, and for some reason people loved that price point.
96 being the inverse.
Yeah.
Yeah, so we could be just drawn to that. In fact, I should draw this as a fair value gap here, because this is the last fair value gap before this high got created. So we have been, there's a ton of liquidity in this fair value gap. When you see all these wicks just going into the fair value gap and getting zapped, that what this means is you've got some very big players who are either packing their bags to go higher or taking their profits from lower. And it's a rinse and repeat where they just keep doing that until they have taken as much of your money, you retail traders, as they think they can. And then price exits that level to either crash lower or pump higher. So always keep that in mind. The big players are doing something. And when you see this rinse and repeat chop, that means that they are either doing a distribution pattern, which this kind of looks like, or they're doing an accumulation, or in this case, a reaccumulation pattern. And I'll post in the private Discord after the stream tonight about the Wyckoff pattern that I think this is. So if you want to get in on the private Discord, hit up cartoonmoneyprinters.com for the little details. I'll post the screenshots of my technical analysis. But basically, what you really need to keep an eye on is this level here. If we exit this level strongly to either the upside or the downside, expect that move to keep going. That's what I'm trying to say, okay? Because you got loads of liquidity down here, and you've probably got loads of liquidity up above here. Okay, let's check the 4-hour chart just for fun. It's been crazy and choppy. But I want to just glance at the 4-hour chart for no reason. Oh, here's my assessment of the what's it called? Volume profile. Oh yeah, let's delete that. Hide that. We got a whole bunch of stuff. Oh no, why am I putting trades in my... I don't need to see that. Basically, we are bearish because we're below the range profile. See this? And we got a lot of selling. We got a lot of buying. We got a lot of selling happening, pushing us down below this point of control. So basically, let's do the TA fresh for the 4-hour, okay? We've got, it's bearish, right? This came up and pumped, and then it broke bearish here from this high. There's the 4-hour. And then that makes this the low, and that broke bearish there. And then that makes this the low, and that broke bearish there. So we have been grinding down bearish, 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 and that makes this low the new target. Whether you like it or not, market structure dictates that this is the target. And this is the high. So there's that. And then we've got this high up here. And this high up here. I believe that's the all-time high for the weekly. So we've got all of this market structure. And here's the range. Okay. We have just barely... Oh, did we front run? We have front run the golden pocket. That is just dangling a carrot. Honestly, with this little order block right here, I am not falling for that. Look at that trap. That is such a bull trap. This little thing right here, order block, bullish, right in the golden pocket. I don't know what's going on here, but look at that. That looks so sketchy.
Yeah.
Let's see. And this is grinded down.
Economic news, I would say that there were talks today with Japan about increasing, I was mentioning to that before the stream, increasing trade with Japan and a few Indo-Pacific partners. So that should be better sentiment, but I think we have to wait like a couple weeks to see how this stuff actually plays out. Talks are talks, and we got to see what the walks are.
Yeah, exactly. Okay, a quick lesson on Wyckoff accumulation distribution. I know I said I was going to post this in the private Discord, but we're going to talk about it a little bit right now, because here's what I see. You've got this zigzag chopping down, and it looks like it might round out and then head back up here. But that is probably a deceptive situation, because that's an SFP, so it should return it to the high. Whenever you get an SFP, like a wick like this, You can see how it's just barely wicked below that low and then shot back up. An SFP dictates that the high is the target, as opposed to if it was a clean break and it displaced strongly below, then you would only expect it to retrace back up a little bit before you get into a very high probability short. However, since it wicked this low and it gave you this nice bullish doji, we should expect it to return to this high. Unfortunately, this looks like a trap down here. There's probably a ton of people waiting to try and get in and go long here. So I would not be surprised if we saw a, let's draw this path. We'll come back next. Okay. So yeah, this is as low as we need to go on Bitcoin. We'll glance at the 15-minute chart in a second and see if there's any trades to take. But the problem is I see all this liquidity down here. So everybody's expecting it to return to this high, but I'm really betting that we get one more nasty wick down below into the golden pocket. Maybe it gets all the way to take out this low and then shoots back up to that high. Okay. So let's, what's this? The 4 hour. So we'll come back next Friday. All right. We'll check on this and see how it does. I'll make this, I'll stretch this out and give it some room to breathe, but this is my forecast for the week. No, that's not a resistance line. That's just, I don't know why I draw that. Draw that up to the high. So this is why I'm not too keen on trading this level either. I don't really like a long here, but it's worth a shot. Let's go to the 15-minute chart really quick and see what we can find. Okay, so you need to dump all this in the 4 hour chart. Yes, 4 hour. Okay. 15-minute chart. So there's that. Oh yeah, that's scary. Not quite sure what to make of this, but from the looks of it, you're getting, this is a 15-minute pullback. It hasn't got up to that golden pocket yet, but this is the trade that you might want to look for. But remember, the SFP of the low should dictate a revisit to the high. So here's your 4 hour low. That's the SFP. So technically we should expect it to at least revisit this 15-minute high. You could possibly look for a trade there because that is in premium of the 4 hour range that we've got here. Yeah, that lines up kind of nicely. If you want to take a short, think about it up here at this level at 98,400. Okay. But I'm not really interested in a long here because this market structure is so low. There's not really much to give you a bullish market structure shift until it gets up above this level. Okay. So watch that level or watch it to just crash below the low again. Either way, there's not much else to do. All right.
Nas?
We got some people in the chat. What ridiculous altcoins or other coins do we want to look at tonight?
Oh, what's up, Kiro? First time catching. I say we look at the Nas real quick and look at the global sentiment using the U.S. economy.
All right. Yeah, a few people tagged me.
I'm a little curious as
BNB.
Yeah, BNB is for one.
Think
but I'm also curious to look at the yen.
Oh yeah, what did it do in the last 24 hours? Very important information. Okay, I want to look at BNB and see what we got. Oh man, that's a nasty monthly candle. Woo, look at that. So the monthly range did this. There's the monthly range on BNB. All right. Thank you for that.
Oh, that's awesome.
All right. So monthly Let's see if there was a trade in here. This is a nice pullback. You had a nice, well, it wicked that high. So technically you would have waited until quite low to find your trade. But this is what we do here. Let's see if there was a trade in the, at least in discount, okay? So we're looking in this range right here for a long, okay? And from the monthly chart, we got to go to the daily chart. There's nothing, just a little tiny wick. From the daily chart, we got to go to the 1 hour chart. Nothing, just a ridiculous stab down. From the 1 hour chart, we could go to the 5-minute chart. And at this point, you're just knife catching. Like, this is, there's no setup on the weekly chart, the daily chart, the 1 hour chart. This is, I remember this was crazy when the market was just absolutely crashing that other Sunday. And then it looks like it found resistance from underside this level. I would not have gone long here because it looks like it is respecting this, and I would have instead looked to short a pullback of this. I would have said, okay, where's my market structure? On the 5-minute, you could trade this. And then you pull this across and look for your short. No short. It just goes right up to the stop loss and stops you out. So no dice on that. And then it's just all this nasty chop, this whole range. That is no thank you. So B&B, let's see.
I traded
We've got a low right here.
Back and I like staked a bunch. And I noticed that it likes to find levels and then hold those levels for forever, for a very long time.
Yeah. And I'm thinking that we've got a situation like that right here, because look at these levels, this high and this low. It's respected. These are the most recent levels that were respected from both sides. This is a big secret, guys. Take notes. When you see a level that gets created and then respected from the other side, that is a very important level and you can trade it. So this is what I'm talking about. You had this right here. It created that low. Then once it was underneath, it broke through, but as it came up, it is now respecting that level from the other side. And then the same thing here. It created this high, then it went back down, and then it respected that level again, but then it bounced off of it perfectly here. So going forward, you should not be getting into a trade expecting one of these levels to be broken, okay? You can trade from these levels back in, like you had a good trade here where it came down and then it came back here. You could have gotten into some trades here and done back into the middle of this zone, because you can see this zone is really being respected here. I'm going to draw a horizontal line. Look at how this zone in the middle of this level, look at how many times this line is getting respected from both above and below. That is a lot. So you could trade from the edge to this level, but that's it. Or you could bounce off of this level and trade it to the edge, but that's it. You do not expect it to go flying up to one of these other levels. Okay, so for now, for B&B, you either trade within this range or you wait for the range to break on a very strong way. We're only on the 5-minute chart, so we could see how small this is on the 1 hour chart. That's actually pretty dang substantial. Let's see what the volume profile is. Yep, there it is, point of control right there. And then these are also important levels, even though they're not respected yet. That value area low that matches up with the discount, that could be a good bounce. So 551 on B&B or so, down to 549 or so, 553. This could be where everybody's freaking out, but it bounces strongly back up in. But that's a super dangerous trade to take. So very careful. All right. I do want to check out the whole stock market overall. Let's check out MNQ. Oh, wait, what were we looking at? Let's see. We were pointing something out. Was it Bitcoin? I think the 4-hour chart on Bitcoin has a squeeze. I didn't check the smasher. Okay, we have a new 4-hour squeeze, folks. So here's where the old squeeze was. This started right there. And what did we get on the... Yeah, that was a really wide squeeze. When the squeeze is way far away, the orange cloud is way far away from the price action like this, it's really hard to trade. And I generally tend to say, okay, see how this price action is dead? I'm not going to just trade this 4-hour squeeze. I'm going to go down a little bit in the price and find a trade there. Oh, see how that had a really tight squeeze on the 1 hour? Well, you could draw that and say, okay, this squeeze like that right there, then go down to the 15-minute and see what happened on the 15-minute chart. What do we got? There it is. Here it comes. We did not have a plus squeeze on the 15-minute chart, but we did get some squeezing until this thing broke down. Basically, that looks like it was untradeable. But what I wanted to mention was we do have a new 4-hour squeeze starting. So I'll hide all this, hide that. We now have a bearish squeeze because the EMAs are flipping. This red triangle is our private indicator, Market Smasher 1.5. This means the EMAs have flipped bearish. We are below the other moving averages, my custom moving averages here. So this is bearish. This is a hop on the train. Like you take this market structure and then you pull this out and you look for a short anywhere between 97,900 and 98,400. And if you really want to keep your risk real tight, 99,240-ish, you look for a short and you expect that this squeeze is going to pop to one of these fib extensions down to 92,000, 87,000, maybe 86,000, 83,000. That's if the longer this squeeze goes on, you should expect the move to get to be bigger when it does fire. Okay. And again, if you want access to our indicators, hit up cartoonmoneyprinters.com. These are all free inside the Discord. We don't charge $1,000 a month or a year or lifetime or whatever for just one indicator. Like we have the Money Minter D down here, which has money flow, momentum waves, and RSI and a VWAP oscillator. This thing is really useful. As you can see, money flow is bearish right now.
Your bandwidth is getting a little choppy.
Oh yeah.
Well, yeah, you're looking a little pixelated. So just to elaborate on that more, we provide a suite of indicators, and we have specialists in those indicators, including the creators, that are able to guide you through how to use them. And they tend to work really well with each other. And we have multiple different creators with different strategies that blend well. So it's $25 a month for the membership, and we have other packages that are for sale as well. So come check us out. You can find all those at www.cartoonmoneyprinters.com. Click the Start Now button, and then you get a month free trial with a monthly subscription. Try us out.
Yep.
Let us know what you think.
The Market Smasher is my custom personal indicator that I coded myself with the help of some code buddies, but I came up with the whole concept myself based on the squeeze, which is why I keep calling it the squeeze. But it's a very unique indicator that is its own strategy. We have tutorial videos on how to actually trade the strategy, but it's a very unique indicator and you can build a strategy out of it. It's very simple. And we have Kermixalot's indicator. The par or price action reader is a multi RSI indicator that is also all by itself tradable as a strategy, but when combined with others, you get even better options. Let's pull up the par right now and see what this confirms. I'm going to hide the lower time frames here and just look at, we got the 4 hour. Yeah, look at how this is just stuck in the middle. That is, oh man. So here's an interesting thing to look at. We could look at this. See how I'm on the 4 hour right now, so this might not count, but I'm looking at this and I am seeing that it might be a bearish divergence between here and here, okay? I'm gonna go down to the 1 hour and the 30 minute. Yeah, so these candle closes confirm that, oh no, see how this does not? See, now when you are on the 1 hour, that is a higher high, or is it? Let's see. Yeah, equal highs. Oh man, that's cutting it close. I'd say this is good enough as a bearish divergence, but also on the, let's check the 30 minute. Yeah, that's given me enough bearish vibes overall. I'm going to call it a divergence. But also, you have to keep in mind that on the 30-minute chart, this divergence is already played out. Because the divergence, when it pops, is only really good for 10 to 20 candles. And we are at 23 candles on the 30-minute chart past that divergence. And we've only got, let's see, we're only at 11, we're at 11 candles on the 1 hour chart. So we've only got like 4, 5, 6 more hours before I would say this bearish divergence is untradeable. Meanwhile, on the 4 hour chart, we've got this squeeze that could go on for another 8, 12, 16, 8, 20 hours before this 4 hour squeeze fires. So I'm not putting much validity into this bearish divergence, is what I'm trying to say.
Going into the weekend.
Yeah, the weekend squeeze, it happens a lot.
The last
squeeze sometimes it's hard to trade. Too. Yeah, sometimes it's hard to trade. Other times it gives you a great setup, and you can really get something out of it. This one was a nice fake out that we saw this in the 4 hour par. See, now we're on the 4 hour chart, and the blue is the 4 hour on the par. So you can see the 4 hour chart gave a amazing bullish divergence here. So that was the squeeze fired, but it was a fake out to the downside. So when we saw that fire off, that's an amazing long signal, and then back up to the all-time high. Okay, so I do want to check out the stock market because we got some global craziness going on. Let's see. Yes. That's Friday. I can check out MNQ. Yeah, this is just ridiculous. The 4 hour chart, oh my gosh. So, on the stock market, we've been in this ever since mid-December when we made an all-time high on the NASDAQ.
We got a request.
We've been in this ridiculous chop. Oh, cool. Yeah. BNB. Hype. Cool. All right, we'll check out Sol in a minute. But the stock market has been chopping, and you've got this one A, B, C, D, E down, and then 1, 2, 3, 4, 5 up. You would expect that I'm just using Elliott wave theory a little bit here. You would expect that if this is an A, B, C, D, E move down, that would mean that the incoming move is a big move up, because pullbacks or counter trend moves are A, B, C, D, E, or W, X, Y, Z type stuff. And then momentum moves, which are the bigger, stronger moves, are the 1, 2, 3, 4, 5 moves, not necessarily in the upward direction, but in whatever direction is the strong momentum. So here we are on the stock market. We've been chopping for almost 2 months now. And that's just grabbing liquidity down below. So it is officially, this is a bearish, this is a bullish daily market structure shift. So that's bullish right there. We did not touch this low. Now we're internal, okay? And that's a lot of, I gotta hide a lot of stuff here. I got my trade log. So right now, this is all that matters. This range right here. This is the daily range on the stock market on NASDAQ. And it's looking really bullish. Look at how that golden pocket got wicked twice. So for here, we should be able to expect a strong reaction off of this level. And I'll mark it out, and then we'll check back in next Friday. But basically, for this golden pocket, that is where we are looking for trades. Okay, Friday, February 21st. Yep, let's check that when that rolls around, and we'll see what we got. This is on the daily chart, so what you're going to do is look at the 1 hour chart and then the 5 minute chart to find your trades. If you don't get confirmation on those time frames, then no trade. Anyways, now let's check out Sol. I think overall, what were we talking about earlier, Mickey? The global economic political situation is really crazy right now. But if there is a fake out happening, it's probably a scary downside and then a pump. That's more likely than a terrible pump, a crazy pump and then a terrible crash. However, you have to have a plan for either thing to happen.
So don't, like, a lot of it's speculation. So like a lot of the stuff that's moving politically, like that's a very slow turn. So a lot of the events will happen because of speculation and either fear or greed.
Yeah.
But you won't actually see the effects of any policy that's being implemented happening for maybe months down the road.
Yeah. Stuff is either priced in already before you, like the split second you hear about it, it's probably already priced in. But you have to also assume that thing you heard about is a fake out and the real move is the other direction. Yeah. So it's a real catch-22 of just never assume that you are the one who knows more than everyone else, because you never are. There are people with literally tens of millions of dollars paying to know things first. So all you can do is define the range, absorb the news, whether it's bullish or bearish, define the range, and then wait for the location to get hit and see what happens. So right now, for example, at this level, we've got the par rolling over, but it's also kind of just in the middle. So it could go either way. We could get it to dip to this level right here, and then it could hit that golden pocket and go, right? Or we've got this ridiculous fair value gap up here. So it could, from here, because we're kind of in the golden pocket of this range here. Let's draw this range here. Here's another thing I've been noticing, and I believe there is some truth to it, but it's not scientific analysis yet. Whenever you get a market structure range that just does not get revisited, like see this pump here, this range, it didn't even get down to the 50%, okay? Let me draw this. What are we at? 1 hour chart?
Your bandwidth is keep coming in and out. Do you mind putting your phone on airplane mode and see if that helps? I'm not sure if your phone's in between the computer and the router.
Yeah, probably need to try that. So, okay. We've also got this fair value gap up here. And basically what I'm looking at is this range never got revisited. So even though we have had a bearish break on the 1 hour chart, you've got this bearish break, and then you've got this other market structure up here that had a fake out up to the high. So now this is bearish market structure on the 1 hour, but because this golden pocket and 50% was never visited, I am... Thank you, Mickey.
Yep.
I'm betting that this will probably get a reaction off of this old golden pocket that could send us up to this fair value gap. And then we'll get that move down there. See what I mean? That's a possibility. And when you look at the market and you see how it's kind of reacting off this golden pocket, that there's this fair value gap up here, and then there's this range down here, honestly, just here's my alerts. I'm just dragging my alerts and being like, I'm not going to do anything until I see one of these levels gets hit, because this could just be nasty the whole time. And there's really nothing to definitively do until you see a reaction off of either of these levels. Okay, so do we want to check on Solana?
Yeah, let's do Solana. And then we got two more. We got Link and Hype. Hype is always one we should check.
Yeah.
We'll close out with Hype.
Okay. Yep. So here's an old fib that I drew. Let's see what's going on off of this. Oh, yeah. It's kind of struggling. It hasn't hit the 786 yet, but the golden pocket has failed. I'm not really a fan of this because look at how the golden pocket was disrespected completely by this fair value gap here. That's kind of bearish. I mean, technically, we're breaking internally bullish here on the 1 hour, okay? But we also front ran this high. So, and then we front ran this low. That's just nasty. I'm not a fan of that. You got this wick. You got a nice SFP swing failure pattern here. Oh, not 4 hour, 1 hour. So technically this should resend it to the high, or maybe up here. This fair value gap did not get its 50% touched yet. So you could look for a short up here if the overall market continues to look bearish, or you could just wait for this low to get taken out. And we need to zoom out here because I've got a weekly premium discount situation. Let's see here. That's too much fluff. I need to start over. Gonna hide everything here. Basically, it's man, I don't know. Look at that SFP on the weekly chart. This dictates that we should revisit this low. And that's where I would start looking for a long, for adding to your spot back. 168, or let's call this out. 169.22 on Solana. That's where I would pack a spot bag.
Throw a fixed range up there and see what that plays.
On this whole thing?
Yeah.
From this high, the old all-time high. Oh yeah, that's not good. Man. Yeah, this is what's called a naked point of control, where it was never retested, so to speak. It just blasted out of it with this fair value gap. And then this fair value gap got utterly destroyed by this bearish candle here. Yeah, it's going to depend on the global situation overall, but this is just this is just begging to get this level revisited. Let me find a I'll just put it here. Approximately 142. It's just begging to get revisited. I will drag this over here to the new high.
Yeah.
And we'll see what this is doing. Yeah. We're below the value area low right now. So if this weekly candle closes down here, yeah, these levels are getting slapped. They're getting visited. I'll say hello to that.
I'd be considering for me personally, filling up some spot bags there at 142. Put a limit order.
Yeah. I mean, honestly, if things in the global news situation start to look very strong, you could look at this whole range on, say, the 1-day chart and say, yeah, we're really close to discount on this range. Therefore, this means it's a good excuse to pack your spot bag right here at this level. So I wouldn't call anybody foolish, although I would definitely say not financial advice, maybe bad idea or slightly reckless, to just throw some spot bag in right here. However, this wicked my danger zone. If we put up the fibbies, this wicked my danger zone. So I don't like that. When this happens, if it wicks the 50% or the golden pocket, then I like it. That's bullish. But if it wicks the danger zone, I'm usually calling it a front run and assuming that it's going to get revisited. So yeah, 169 or 142 for Solana longs looking there. What do we else we got? Hype or what's next? Link.
Let's do Link, yeah, and close that with Hype. Linky Link.
Oh man, Link also got a ridiculous wick down below that low. Yep. 1D SFP. That's look at this par gap though. That's interesting.
That's massive.
Link, let's look at the 3060. Well, okay, 3060 is not really that useful on the 1-day chart, but that is some, yeah, this is another, like, especially if you get the 4-hour par and the 3060 par down into this low area again, that's a pack your spot bags for the long-term situation again, definitely.
There's a bullish divergence in the 4-hour.
Yeah, if it rolls over here, that's a bull div, but it might just keep going.
Well, you got from the 6th, there's that one hump.
Oh, this?
Yeah, on the top side. You go from top to top of the 240.
Oh, that's a bear div. Yeah. Did you say bull div accidentally?
I may have.
Yeah, that's not good.
No, that's a bull div, right? Because momentum's going up and price is going lower.
Anything that's on the top has got to be bearish.
Good point.
Peak to peak is always a bear something. Valley to valley is always a bull something.
Ah.
So that's, but again, by our rules of how long it takes to play out, it's already been 12 bars, but this is the 4-hour, so we do have to check it on the 4-hour. Yeah, it's valid on the 4-hour. But, yeah, I'd say, okay, so on the 4-hour, we could give it until,
Monday?
Yeah, I'd give it till Monday-ish to play out. Maybe pack your spot bags anywhere down here. If you get a nice par gap anywhere around here, that's where we're looking. Let me drag this.
Not financial advice. We gotta get that on the soundboard.
Yeah, we gotta get some boring AI generated voice to be like, "This, the following is not."
At 2000.
Yeah, that's a great. This is a great stink bid level. If you see a par gap and it's down here, you're definitely looking good.
And honestly, like Link had such good pampage that like, you know, getting some accumulation and retraction is probably healthy for it.
Yeah.
Like it pumped hard. What, like 6 months ago?
Yeah.
Yeah, that's insane.
Yeah, look at this. So there's the low, because that's good market structure. Oh, we are right at that golden pocket. So very fair, considering the overall situation. And if you have, you know, months to sit on it, this is a very fair spot to just throw some spot bag at it.
Do you mind
And
throwing a fixed range on it as well from the
this
October?
whole
Yeah.
this
Back
whole
back
this
further.
whole entire thing.
Yeah, back further to October. I'm
Huh?
sorry. No, no, zoom in more.
October or what?
October. On the bottom, you see that?
Okay,
I'm
so
sorry.
this whole
October of last year of
yeah.
2024. Go back a year.
Okay, so you mean this whole range here?
Yeah.
Yeah, I don't like how this point of control is naked again. And you got, yeah, that's, well, it did fill that fair value gap, so that's bullish. We could, yeah, this, again, this will depend on the global politics and whatnot, but
Mm-hmm.
there's a lot of opportunity to stink bid down here. So